What's up, guys? Welcome. Starbucks stock is crashing. Will it recover or is it going to get worse for the coffee chain? Stick around to the end of this video because I'm going to tell you guys whether or not I'm buying Starbucks stock here. So it's amazing to see, you've got the news continuing to tell us how great the economy is. Yet if you dig just a little bit deeper, the best companies in the world continue to tell you that it's bad. Starbucks and other S&P 500 companies are quite literally the biggest and the best companies in the world, which brings unique advantages when you're operating at such scale. So when they tell you they're struggling, that means it's even worse for small businesses. So, if we look at Starbucks' recent earnings call, it was terrible. The stock dropped 16% as a result. I'll pull up the chart here, but that's what got me really interested in giving the company another look. And here's some of the things that I found. So, the CEO on the call said, he said, we continue to feel the impact of a more cautious consumer, particularly with our more occasional customer, and a deteriorating economic outlook has weighed on customer traffic and impact felt broadly across the industry. That was the CEO. So, while Starbucks does sell highly discretionary, overpriced coffee, you could argue, you can extrapolate that if people are not buying $5 drinks, right? It's relatively a cheap discretionary purchase. You can bet they're not going to buy the more expensive items, in this discretionary category, which basically would be everything else. Now, some interesting trends on Starbucks. They said 63% of their beverage sales are cold drinks, and that was up 1% year over year for the second quarter, which that brings me to the main point that I wanted to highlight, which is that Starbucks actually seems like a somewhat seasonal or cyclical business in which it does better in the warmer months. And, because of this, the current quarter historically tends to be the weakest, with business picking back up in the spring, in the summer, in the fall. So therefore, I think this is a great place potentially to buy some Starbucks as it's probably at or near the low. Now, as you can see in the chart, Starbucks has reached this level every year for the past 4 years in May. The only time it went lower was during the pandemic. It then proceeded much higher over the next few quarters. So it makes sense, if 63% of their drink sales are cold, that they're going to do better in the warmer months than in the cold ones. Then in the fall, they benefit from a combination of warm weather and, these seasonal favorite drinks like pumpkin spice lattes and the disgusting peppermint mocha. Don't even get me started. Mint is only acceptable for teeth brushing, not eating. It is totally gross. Now, Big Money seems to agree with me, as someone just sold 4,000 puts at a $70 strike, meaning they're willing to buy 400,000 shares of Starbucks for $28 million. I'd say this person is pretty confident that this is the bottom and or a great place to buy. Now, thanks to the crash that we've seen with the stock here, you also get a higher dividend yield now with Starbucks, which is now around 3.1% or $2.28 per share annually while you wait for this recovery to happen. So that means if you own 100 shares of Starbucks, you're getting paid $228 annually in dividends alone. Now, the company is also increasing its dividend every year. They've grown it on average 10% annually for the past 5 years. Now, the one developing threat, there is some things to worry about with Starbucks that I want to touch on, and then we'll just get to a few of the main metrics from their earnings call and whether I'm buying the stock here. I do think that they have a pretty legitimate threat that I'm continuing to monitor, and that is the rise of this whole energy drink space, mainly Celsius. I think that these energy drinks are probably part of the reason you saw Starbucks sales decline, and they're definitely worth keeping an eye on. Now, Celsius is a stock I've been covering. I got in around 60, I got out around 90. Now I'm back in. They've got earnings tomorrow, and I'll definitely be talking about it. So don't forget to subscribe to the channel so you don't miss out. But, energy drinks are no longer reserved for vodka Red Bull parties. People are drinking Celsius all the time now, and perhaps in place of their Starbucks coffee, even. I just continue to see people drinking them at the gym. It's become a favorite in the workplace. And some people even like to drink Celsius with their food, as you see Jersey Mike's and Dunkin' Donuts, now carry Celsius. And guess what I'm drinking? It's just so refreshing. I mean, I'm drinking this over Starbucks too. So there you go. And funny enough, I was writing an article on this morning. And right after I wrote out that part, here's the part I got to in the Starbucks earnings call, where the CEO stated big surprise here. This may shock you all. They announced, the CEO stated, we are launching a 0 to low calorie handcrafted energy beverage. And later this year, we will add up to 5 sugar free customization options to our menu in response to both partner and customer requests. This will provide a lower calorie option for approximately 80% of our beverages, the CEO stated. Now, this is very interesting on two fronts because I've been talking a lot on the channel here about this shift to health. People are getting more health conscious. That's why I like companies like Chipotle, all real ingredients. Celsius 2 is another great example. A healthy energy drink, the first of its kind. And there's also on the monetary level. I mean, you can buy one Celsius. I could probably get 4 Celsius cans for the price of one, Starbucks Mocha Froca $6 drink. So, what are people going to buy, especially when times are tough? And then you add in that a lot of these Starbucks drinks are expensive, high calorie, high sugar. Celsius has no sugar, so that's interesting. So we'll see what happens there. I'm sure Starbucks will make a great energy beverage too. And, they know what's up. They know where they got to pivot to. And I just thought that was really interesting. And it just shows you the potential from this energy drink space. Again, Celsius, I think, is a great company too. I'll cover that tomorrow or the day after. So additionally, Starbucks, the company, is also building more than 3,000 new stores globally this year. Their mobile order and pay set another record in the US this quarter. It represented 31% of transactions, and Starbucks Reward members now number nearly 33 million. They have 33 million Starbucks Rewards members. Now, this is a similar strength like I had highlighted in my video on Chipotle, because they have a big mobile ordering trend. I talked about in my Chipotle video how Chipotle Rewards members are now up to around 40 million, which I was very surprised to see that they had a higher reward member count than Starbucks. So really interesting. And I think these rewards programs, digital apps, they're a large part of what makes Starbucks so successful, makes Chipotle very successful. We know that these result in higher frequency of customers going to the restaurants, as well as a higher spend from those customers that tend to opt into the rewards program over time. So they're coming more frequently, they're spending more money. It's a great business model. Now, if we move on to some stuff from Starbucks report here, let me pull this up. As I said, here's the mobile ordering numbers. It's here to stay. It's only growing. I think this is a huge strength for companies like Chipotle and Starbucks, but Starbucks up to nearly 33 million rewards members, mobile members, whatever you want to call it. And 31% of transactions came from mobile order and pay. Now, this seems like a really bad one-off quarter to me. This was definitely a little scary. You got negative 1% revenue year over year, which is nothing, all things considered again, but the negative 11% in China, that is some cause for some concern, definitely something to keep an eye on. But at the same time, I think this was just a bad one-off quarter. That's basically what the management said too, that, they can do better. This quarter is not indicative of what the company's capable of. So I think this is all going to blow over and improve, over the rest of the year as we move into those warmer months. Like I said, I think Starbucks, you really wouldn't think this. And again, until I looked at this chart here, the 5-year chart, I wouldn't have thought it too either, but this tends to be a weak quarter, right? The stock is always bottoming in May, it seems like, right? May 2022 was $75. So they didn't issue great guidance here, as you can see. But again, I think that this is historically the company's weak quarter, and perhaps this is a case of under-promising, and then they're going to over-deliver. So because of all this, I started buying Starbucks along with a few other companies today. And I announced those companies in our community Discord in real time today when I was buying. You can sign up for the community tier in my link to my Substack down below. You can sign up on the free tier to read all my articles. Those are free, but if you want community access, you can sign up for the paid tier. You get a lot of perks with that. We're doing weekly calls. I'm sharing all my stock and options trades. Last month, I made over $7,000 with options trading. I shared all those trades in real time. So check that out if you guys are interested. Let me know what you think in the comments below. And don't forget, later today, we've got Symbotic reporting earnings. I'll definitely be covering that. Subscribe so you don't miss out. Tomorrow, we've got Rivian. We've got Celsius. I plan to cover all these companies. Subscribe so you don't miss out. This is Vinny from the Investment Club. I'll see you guys next time.